In the last 3 months, my account is up over 56%, and I did this all with just 3 simple investing principles. I call it my triple threat. So my first threat to this triple threat, or my first principle, is that time in the market beats timing the market. Every investor should know this is a fact. This statement is the reason why Warren Buffett, a long-term value investor, is one of the richest people in the world, and not a day trader sitting at his desk messing around with technical analysis. Time in the market wins because the market will always keep growing. It may encounter recessions, corrections, and even Great Depressions, but it just keeps on chugging. It's a machine. Through the power of compound interest and reinvesting profits over time, your investments will grow. Now, my second principle is to maximize returns, time the market. Seems contradicting to my first principle, right? In a sense, it is contradicting, but in order to maximize returns in a shorter amount of time, you'll need to time the market correctly. Warren Buffett may be a long-term value investor, but he still times his investments and decides when it may be time to sell or when a better time to buy may be. This second principle adds more risk since timing the market is very difficult. But if done correctly, then it can maximize your return. For example, if I invested in Apple a couple years ago at $224 per share, I would have made a 23% return since then. That's not bad, right? However, if you were able to time it better and buy the shares when it dipped down to $152 per share, then now you would have made an 83% return. Much better. One main problem with this second principle is that greed wins over a lot of people. Everyone wants that bigger return, and most will get too greedy and time the stock incorrectly. In order to time it correctly, you'll need to evaluate the company, evaluate the news, and figure out the exact reason using logical methods for why the stock price is at what it currently is at. Ask yourself, is the stock price too high right now because it's overhyped? Does the company's finances make sense in relation to the stock's price? Does the company have room to grow, or are they stagnant or declining? Time the market through reason and logic, but avoid greed at all costs. Now, my third principle. My third principle is investing in a company you believe in. I already made a video on this principle, which I link here or in the description, but investing in a company you believe in is a very important philosophy to me. Of course, some people make money by betting against companies they don't believe in, or simply just going off numbers, not caring about the company or its product or people. However, I like to invest in companies that I can see grow, that have similar values to me, and that I see great potential in. Of course, you'll need to make sure the company is viable and that it has a real growth potential, but investing in a company you believe in is an important step. So that's how I made 56% in 3 months. I held my stocks long term, I timed them all correctly, and I invested in companies that I believed in. If you still believe in. If you want to see a more detailed breakdown of my investments, make sure to subscribe since I'll be releasing a detailed breakdown of my portfolio in an upcoming video. This is Stockerfinance, and I'll see you in the next video. Peace out.